Hello everyone. Thank you for joining today's training session on TTI's personal tax scenario and corporate tax scenario worksheets. My name is Jay Goodis and I'm the CEO and co-founder of Tax Templates Inc. The goal of today is to keep this as short as we can, between 20 and 30 minutes. We're going to go through both of the worksheets in some relevant detail. I am monitoring all the chat and the Q&A, so if there are any questions, please put them in. I will spend some extra time afterwards answering any questions anyone might have. So I see that we have a combination of new clients and existing clients on today's session. So I'm going to try to balance both of those approaches as we go through today's worksheets. All right, so let's just jump right in. On my screen right now, we have TTI's personal tax scenario worksheet. Before I go through the worksheet, I just want to remind everyone some key aspects of Tti Solutions. First, wherever you see these grayish green cells, these are optional input cells. They will be the ones that we use the most. Wherever you see gray cells in our worksheets, they are locked, and they are locked to protect the integrity of the formula. The last thing we want is somebody accidentally overriding something that will completely change the answer. You cannot do that in Tti Solutions. Now, next to all of these cells, we have these little boxes, and these are built-in review ticks. So we use O for correct, X for incorrect, Q for question, M for manager, and P for partner. So this is a great way to communicate internally with your staff through the document. And it's also a great way to review your own work when you are using TTI's worksheets. Now, next to all the cells as well, we have these note cells. And this is great for writing any notes you need next to any of the relevant inputs. It's also valuable for anyone who might be a bit of an Excel enthusiast. So if you want to build any of your own formulas, you can do that directly in TTI's worksheets as well. Now, when I went ahead and put in that $100,000 number, some of you may have noticed that this red popped up at the very top, and this is TTI's error guide. And what our error guide will do is it will highlight whenever there's something that has been entered incorrectly in the worksheet or there's something that needs to be completed. This is actually a link. So if I click enter province, it will take me to the row to complete. And I'm just going to put in the province that I'm looking for. When I hit the province and hit enter, you will see the error guide will go away. Now, at the very top of the worksheet here, you'll see we have lots of links. We have links that will take us to different tabs in the workbook and links that will take us to different sections of the current workbook. So for example, if I want to go down to the dependent section, I can just click the link. It will take me down to dependents. If I want to go to contributions and carry forwards, these are really useful when navigating the workbook or the specific tab so we can operate a bit more efficiently. All right, at the very top, we also have our buttons, and these buttons have a few different purposes. First, I'll talk about the view buttons, the ones in the middle. When you open the worksheet, we actually default to the minimal view. So for example, if we look at the taxable income section, we won't see every line we'd see on a typical jacket. They are hidden. If we want to access additional information, such as donation on stock options, capital gains exemption details, and a host of other more complex features, such as detailed credits, we can just hit the standard view button or the advanced view button, and you will see all those rows unhide. We also have a button called Import Values from another worksheet. This is a new innovation in 2021. So this is very useful if, for example, we release a new worksheet because tax rates have changed as a result of a budget, and you might be midway through a file. You can just open up the brand new worksheet, you hit the Import Values from another worksheet, select your existing workbook, and then we will bring through all of the data from the existing to the current. We do have a YouTube video explains exactly how to do that. It's very quick, only takes about 30 seconds. All right, and the other piece I really want to focus on is our completion guide. And we're going to be using that today. And what the completion guide will do is take us step by step through every aspect of the worksheet. So similar to the error guide, in this case, this taxpayer details is a link. So if I click it, it will take me to the section to complete. And you will notice there is an instruction immediately above. So in this case, we have to enter in the taxpayer's name, their province, their year end, and birth date and such. The worksheet does allow us to go as far back as 2018 and as far forward as 2028. And you can use every one of these scenarios however you see fit. And you can always update the date of birth. We do default it to 1980, which takes the taxpayer about 40 years old. So, but if the taxpayer is under the age of 18 or over the age of 65, then it is very important to put in the correct date of birth, as there are certain elements that apply. Okay, so now let's go ahead and maybe build a simple scenario for our client. So next up is our total income. I've already put in some employment income. Perhaps we'll put in some eligible dividends along with some capital gains. You will see in the capital gains section, we do break it out between proceeds, ACB, and the non-taxable portion. The reason we've done this is for cash flow planning. Having those numbers separated makes it a little bit easier when reviewing the cash results with your client. Once that section is complete, I marked the section as done, and I'll now move on to TOSI income. The reason the worksheet is asking for TOSI income is we put in some investment income and it wants to know whether or not that income is subject to TOSI. In this case, we'll say it's not, and we'll just move on to the next step. The next step here is our carried forward balances. So you'll see some very popular carried forward balances on the screen immediately. If you want to see more, again, if we select the standard or advanced view button, we will see things such as non-capital losses, tuitions, and some other rare items. In this case, I'll just put in some capital losses into our scenario along with RRSPs. Now, when I enter in the RRSP's contributions, you will notice that the RRSP deduction limit is automatically going to populate. And you will see that our completion guide will remind us to confirm that RRSP deduction limit. To streamline preparation, we populate it automatically, but of course it can be overridden and changed to support the exact scenario of your client. The next step is our dependent details. And this is a very important section because in our worksheets, we don't just look at items that are on the tax return. We're going to look at items that are off the tax return as well. So a very common one when we're dealing with a young child might be the Canada Child Benefit, which is reliant upon net income or taxable income. So by putting the dependent in the worksheet, when we are looking at the after-tax cash results for the client, we are going to be able to see the impact of the Canada Child Benefit. Once those amounts are filled in, we can fill in complete the net income and taxable income just to ensure that it aligns in what we were expecting. We'll then be asked to fill in any amounts such as credits and other amounts. Again, a good chunk of this section is hidden, but if we hit advanced, we'd see elements for the province of Ontario because that's what we have for the scenario along federally, things such as Trillium benefits and other unique details that might apply for those unique situations. We also included here our income tax deducted and tax paid by installments. Again, so as we show our client how much tax they may have to pay on April 30th, we can give them that number by including them in this section. The final step is going to be to optimize results. And this is important to run every time we run a situation. And to do that, I'm going to click the button at the very top of the worksheet, Optimize Discretionary Amounts and Reset View. And what the optimizer is a proprietary algorithm that we created. And it is going to look at all the discretionary amounts such as RSPs, losses, and things that might apply, and look to maximize the after-tax cash of the taxpayer and minimize their tax liability. In this scenario, we have a very simple case where it's going to claim the full RSPs and the net capital losses to be used to maximize their after-tax cash. But if we did have a client that was married, it will look at things as pension splitting, transfer of dividends, and other elements that might apply. And if you did have a situation that was married, you would just choose from the drop-down menu that they were married or common law. And when you do that, you'll see that the second taxpayer becomes the spouse of Mrs. A. So you have scenario 1 for Mrs. A, scenario 2 for the spouse, and that's how you can build out the scenarios. I will bring us back to single just to keep the situation a little simpler. So another thing that happened when I hit optimize, if you can look on the screen, is that all those rows from before are now hidden. So from a review perspective, we're only seeing the line items that matter for our client. So it makes it a lot easier for us as professionals to review what the situation for our client is. To see what the tax results and the cash results will be is we need to go to the base results tab. And we can get there one of two ways. We can click the link at the very top of the worksheet, or we can click the base results tab at the very bottom. So let's look at our cash summary first. In the scenario that we built, we can see that our client had $150,000 of cash. We have transfer payments, which is most likely our CCB. We'll look at that in a moment. We have our total taxes, CPP, EI, childcare, and the net cash. Now, a question that we often hear is, well, what if my client's not subject to EI? That's not a problem. If that is the case, just back on the T1 base tab, we do have an employment section, and you can just select here how much employment income is subject to EI. We could override that to 0, and that will remove any EI component from the summary, including any EI credits. So in this case, after childcare and everything put on the worksheet, our client is going to have $128,267 in their jeans. Now, when it comes to the tax summary, down below here, we can see the full tax summary for the client, the federal taxes, provincial taxes, and we also have some refundable credits. So this is what's going to agree to our tax return on April 30th, 2022. The worksheet already has all the rates built in through to 2021. They've been there since November of 2020, and we will be updating the rates for 2022 in about 6 to 8 weeks time from now. Now, below this, you'll also see the carry forward summaries. So if we're revising our client, we can do some planning and understanding what losses and RSPs might be available. And if you'd like to see the tax details of how everything is being calculated, below we show you all the federal tax details, followed by all the provincial tax details. All key elements such as AMT, TOSI, rate reductions, health premiums, surtaxes, they are all built into our solutions. Scrolling a little bit further, you'll see that we do have refundable credits and transfer payments as well. So we have the Ontario Care Credit along with the federal CCB. Now, if we want to look at these results a little bit differently, all worksheets in TTI's tax planning collection do come with charts. So here is our first chart, which is a base cash chart, given a summary of the cash for the client. If we aren't using all scenarios, we can edit that in the worksheet. All we have to do is unprotect the chart tab, and you'll see that there's a filter button. We can click the filter button and just deselect the scenarios that we're not using, and then we can show the client the scenarios that would apply. And all of our worksheets are already set up to print. I think we've all spent too much time in our careers trying to format Excel to print. So they are all done for you. And this is my TTI suite, and you will see Tax Templates Inc. in the bottom left-hand corner. But we do put the logos on for all of our clients. So if you haven't sent us your logo yet and you want your logo on every TTI worksheet, please send it to support@taxtemplates.ca, and we'll put that on for you and send you a new TTI suite shortly. All right, so the second chart we have is the base tax chart, which is going to give you a breakdown of all the taxes paid by the client. Now, if I return to where we started, which is on the T1 base tab here, I really want to speak about the flexibility this worksheet provides. Each one of these scenario columns operates completely independently. We can change the taxpayer, we can change the province, we can change the year end. Think of it as a tax preparation software that allows you to go as far back as 2018, as far forward as 2028, and you can change anything you like along the way. So how we can actually do that is using the taxpayer name. So let's assume we want to run different scenarios for Mrs. A. I'm just going to put Mrs. A's name in scenario 2, and you will see it's going to bring forward all of Mrs. A's information. So let's say we want to do a 5-year plan for Mrs. A. I can change this to 2022. It'll bring forward all the numbers from 2021, along with any carry forward, any balances that might apply. Let's assume Mrs. A wants to move to Alberta. Well, let's just change the province to Alberta. There we go. And now we can see the results for Mrs. A in Alberta. And we can do this for all of our scenarios. So if I do Mrs. A in scenario 3, same idea. Maybe we do a 5-year plan. Let's see what 2023 looks like. Maybe in 2022 and 2023, Mrs. A thinks she's going to have more employment income. We can change all these numbers as we go, and then we can go ahead and review all of our results with those numbers side by side. Okay, so at the very top of the worksheet, we also have our indexation rates. And what these are for, if you are doing a multi-year plan, you can put in what you expect the indexation rates to be. And we will index all those brackets and all those credits that should be indexed. So you're giving your client a better representation of what their after-tax cash results will be in those future years. And we also handle more complex elements in this worksheet as well. So let's click the advanced view. So we're going to be able to see a lot more detail. One of the things that I trust that most of the community has heard about recently is the legislation in Bill C-208, which is now allowing for the opportunity to claim capital gains exemptions when selling the business to related individuals. So there might be a lot of capital gains exemption planning that is occurring. So if we wanted to see that type of detail in this worksheet, after we hit the advanced view, we are going to see a lot more detail populate in the worksheet, and we can go ahead and select that what might be applicable. So I like to use these blue links to help me navigate parts of the worksheet. So in this case, if we want to get to the capital gains exemption, I will just go ahead and click the blue link here, take me to the capital gains exemption section. And we can go ahead and select what we are looking to dispose of. So let's say, for example, that we have a client who has qualified small business corporation shares. We can select that from the drop-down menu. We can put in the applicable proceeds. So maybe there's proceeds of $1 million and any applicable ACB. And when we do that, you'll notice immediately below that our capital gains exemption details will automatically populate for us, and they are going to be put directly into the applicable parts of the worksheet. We have left some of these elements overridden for those complex scenarios that might need a unique override. So in this section, again, you'll see capital gains reserve, non-capital losses, foreign income, and a host of other elements that might be applicable. So the next thing I want to show you is our T1 Marginal tab. And this is a very important tab. And I'll show you why. If we look at the client scenario here, we've got a base scenario. And we have taxable income here of $138,201. So oftentimes clients will come to us and say, look, here's my current scenario, but what happens if I have a capital gain on the disposition of a rental property, or I dispose of a cottage? Or maybe I'm somebody who's a little bit older. If I take more money out for my RIF, what's the impact to my OAS clawback? What's my marginal tax rate going to be? How much cash can I actually keep? Well, to solve those scenarios, we can do it on the T1 Marginal tab. So I'm going to go ahead and click my T1 Marginal tab, and you have the same flexibility as the base tab, but what we're going to do is calculate the results at the client's precise marginal rates. So let's assume that we'll go with that capital gains example, where maybe our client has a capital gain here of $100,000. So I'll put in the 100,000, I will hit optimize, and then what the worksheet will do, it's going to determine what is our after-tax cash going to be on this $100,000 in capital gains. And again, it will be at the precise marginal rates, which based on the section we just looked at, or the base worksheet, is going to be above $131,000. So in this case, if you'll notice that the optimization is taking a little bit longer to run the second time through than the first time. And the reason is because we put in a capital gains exemption into scenario 1. So when we do have some of those more complex elements, the algorithm is going to look through all the things that might apply as we look to maximize those after-tax cash results for our client. You know, in this case, we have capital losses, we have capital gains exemptions, and RRSPs. So it's looking to determine how much should we claim of each and how much can we claim of each to maximize the client's after-tax cash position. So once our algorithm is done running, we are going to be able to see that if our client had that capital gain of $100,000, what is going to be their after-tax cash results. And all of our charts will update along as well, and we'll be able to review the results both on the base, so what happened before we did this additional planning, the marginal planning, and everything together. So now we are on our marginal tab here, and we can look at our marginal taxable income. And as you would expect, 50% is not taxable. So we have a $50,000 capital gain, or taxable income as a result of the capital gain. If I move over to my marginal results tab, we're going to be able to see that if our client had a $100,000 capital gain, while they're going to have their transfer payments reduced as a result of the additional income, this is a reduction of our Canada Child Benefit. We have our total taxes calculated at their precise marginal rates. So in this case, our client's going to have $81,578 in their jeans as a result of the disposition of $100,000. And to see the additional taxes, they are immediately below to see the marginal federal taxes along with the marginal provincial taxes. And if you want to compare both scenarios together, all of that detail is on the total results. So you can see both the base and the marginal results together. And similarly, all the charts here, this is our base chart, our marginal chart, and our total chart. All right, and we have a question about how the printing works on the base results tab. We don't have the ability to change the print previews here. It can be done manually, but it is going to show the base results header every time. But again, we have tried to arrange the print settings to be as clean as possible. By hitting the optimization button, again, it's going to hide the rows that we do not need, so it is going to be as clean as efficient as possible. All right, I'm going to keep my eye out for any other questions, but for the moment, I am going to close the personal tax scenario worksheet and move on to the corporate tax scenario worksheet. So the corporate tax scenario worksheet is similar to the personal tax scenario worksheet, but it is meant for corporations. A key element I forgot to mention is that the reason we start people on our clients on the personal tax scenario and corporate tax scenario worksheets is as we get to more complex worksheets, such as our salary dividend optimization, it includes both of these solutions. So it's like we're building these puzzles, and we have these big puzzle pieces that we use as we get to more complex solutions. So having familiarity with these two solutions will make it much easier to navigate the other solutions in the tax planning collection. All right, so let's go ahead and build a scenario for Opco. I'll remind everyone that the worksheets also have YouTube videos as well to take us through through each tab of the workbooks. But let's build a scenario here for Opco. This is one of my personal favorite worksheets. When I was in public practice and I was doing corporate tax planning for clients, I constantly was jumping from schedule 1, 2, 3, 4, 6, 7, 21, and it was very time consuming and complex. In this worksheet, we can just fill in the numbers that we're looking for and have our answers very quickly. So I can go ahead and use our completion guide again. So maybe we have a client with a 2021 year end, and let's just put together some different incomes that might apply. Maybe they have some active business income, perhaps they have some investment income, capital gains, and eligible dividends earned in the market. Once I include all those different amounts, if I just jump right down to my corporate taxes and cash results, we'll be able to see the corporate cash summary for our client. So in this scenario, client earned $190,000, and we provide a full breakdown of the corporate taxes. We have the Part 1 non-refundable taxes, Part 1 refundable taxes. There's our ERD2H on the eligible dividends, and our provincial taxes. So in just 30, 45 seconds, we now have a detailed summary of the after-tax corporate results for our client. And oftentimes when we're doing this type of planning, we're also looking at the various balances that are available for things such as dividends. So if you want to see elements such as losses, NERD2H, ERD2H, GRIP, and CDA, you will see all those balances directly in the worksheet, so you have them at your fingertips to help your clients with that tax planning. Now, if I go back to the summary section, you may have noticed in the notes section, we have dividend recommendations. And the reason we have these is sometimes the amount of dividends to pay that can recover Part 1 refundable tax or Part 4 tax can be tricky, and especially true when it depends on the GRIP balances and the amount in each of those RD2H balances. So we actually have a dividend optimizer built directly into the worksheet to make suggestions on the amount of dividends to pay. So in this case, if we pay 40,000 eligible dividends and 28,000 of uneligible dividends, we will recover the full amount of those refundable taxes. But let's take a look at a scenario maybe where a client doesn't have as much cash and they'd like to pay out some dividends, but again, we don't have the cash there for them. So in this case, you'll notice that I just put in a cash adjustment up top. Let's assume that it's not available, and we have $20,933 of cash. How much in dividends should we pay? Well, I trust we've all been in that situation before where we pay $10,000 in dividends, we get 38% back. We then go ahead and pay a dividend of $3,800, we get 38% back, and we're in that circular calculation. Well, that circular calculation is also built into the recommendations. So in this case, if we pay a dividend of $33,946 of eligible dividends, we will see that our cash balance will go down to zero. And the reason it goes down to zero, because we have determined how much dividend refund will be paid through that circular calculation. Now, there's lots of ways that clients like to use this worksheet, and I'll share a few of them with you. So let's go ahead and build a plan for Opco that goes multiple years. And a few things I just want to highlight is, first off, whenever you have ending balances one year, they become the opening balance of the next. So for example, if we have a closing NERD2H, that balance will automatically flow to be the opening balance of the next year. If I jump to our active business income section, we do provide the adjusted aggregate investment income because that can grind down our SBD limit. So that is automatically built in the worksheet. And of course, again, is overridable in case we have some unique adjustments. I will hit our advanced view at the very top here, just to show you some other elements that are built into the worksheet. In the ABI section, we do support SPI, SCI, and MMP. So those more complex details are there for clients who need it. If you do have clients that operate in multiple jurisdictions, we do provide you the multiple jurisdiction information. We support foreign amounts. We also support the disposition of assets and including donations of capital property in case we want to quantify those through the corporation. And if I were to jump down to the carry forward section, you would see a few others such as non-capital losses, donations, and FTCs. All right, so other interesting ways to use this worksheet is we can put an entire corporate family on this worksheet. So maybe we have Opco in scenario 1, perhaps Holdco in scenario 2, and Subco in scenario 3. So a great way to show your clients the results of all the corporations inside the group. Another popular use of this worksheet is right now we're in October, and this is the time clients might be calling asking, well, how much tax do I have to set aside with a December year end? Well, this is a great way to jump on a Zoom call, ask them what the results are, put in their various different income, and you can show them the cash flow of how much to prepare for their corporate taxes. From a compliance standpoint, oftentimes reviewers like to confirm that the amounts entered in the T2 make sense with their own reconciliation. We have a lot of clients where the reviewer, whether it be a manager or the partner, will open up this worksheet, include the numbers directly from the T2, and then confirm if the total corporate taxes agrees to the amount on the actual T2 return as their sanity check. And if we have any junior staff in the office who might be new to corporate tax and really trying to understand how do these refundable credits work, they can open up this worksheet and in every scenario build in different types of income. Maybe we'll do investment income in scenario 1, perhaps eligible dividends are in the market scenario 2, capital gains in scenario 3, and they can really watch and understand how do the corporate tax system works. It's a much easier as a learning tool to understand than perhaps the T2 jacket, which is how I learned and I think many other people have learned as well. All right, so I'm going to open up again to see if there's any other questions that come through. Otherwise, I'm going to highlight one more element and then, before I leave here, I just want to mention that this worksheet as well comes with charts as well. So you do have a T2 cash chart and a T2 income chart to show you the results for your clients. Again, every worksheet in the tax planning collection has these charts. All right, so the last thing I'm just going to highlight for you is that we do have a worksheet that's called Corporate and Personal Tax Summary. And this is just like the last two worksheets that you saw, but it puts them all into one document. So if we do have a corporate family and an individual family, and we want to run different scenarios or we want to show the results for them, you can do that directly in the Corporate and Personal Tax Summary. The T2 tab that you see at the very bottom here is just like our corporate tax scenario worksheet, and the other tabs, the T1 base and T1 marginal, are just like personal tax summary. Now, in this particular solution, there is no integration between the corporate tabs and the personal tabs. So for example, if you put in a dividend of $100,000 here on the corporate tab, it will not flow to the individual tab. You can either enter it manually, you can set up the formula yourself. The idea is to give people the flexibility to use the 8 corporate engines that are available and the 8 personal engines, however they like, whether it be for one person, multiple people, same on the corporation side, one corporation or multiple corporations. All right, so to my promise, I want to keep this between 20 to 30 minutes. I will stick around for a couple more minutes if there are any questions, but if there's anything I didn't cover in today's session and you have follow-up questions, please do not hesitate to reach out to us. My email is jay@taxtemplates.ca, or you can reach any of my colleagues at support@taxtemplates.ca. Thank you very much for being a TTI client, and if there's anything else we can do to support your practice, please let us know. And keep in mind, we have a few more training sessions this week and next week on more worksheets in the tax planning and tax accounting collection. So thank you very much and have a great day.